Hey fam, let's briefly discuss all the macro developments and macro charts that we have covered this week because I believe that we stand at a point that is pivotal to the market and that can influence the mid to long-term direction of the crypto market. Starting from Bitcoin, obviously we've discussed the potential bearish divergence on the monthly time frame that looks exactly like in 2021. We will need to see how this month closes. If it does close below this trend line, then we have a very similar situation like in 2021 where Bitcoin topped and entered a bear market. So this month's close will be crucial to the mid to long-term direction of the crypto market as well. If you want to zoom in on more lower time frames, specifically the daily, you can create a bar pattern. I've explained the process of doing this in my corner, so you can check this out and can compare the day-to-day price action of Bitcoin today with the same period in 2021 when the bearish divergence was formed for the first time. So far, the price action is very similar, and we will see how this will play out in the next few days and weeks and then reevaluate our stance towards Bitcoin. While Bitcoin is trying to print this monthly bearish divergence, we have the dollar at a crucial area as well. We have talked about this parallel channel a few times, usually in the past when the dollar reached the range lows of the zone, the crypto market topped, whereas when it reached the range highs of this zone, the crypto market bottomed. It's only logical because when the dollar gets expensive, investors look for assets with better returns, and since usually Bitcoin is at bear market lows in this zone, the returns from it become significantly more promising than the dollar that is expensive. So here we are very close to range lows. If we zoom in, we can also see that there's a bullish divergence on the weekly time frame and 3-day time frame, which can lead to a significant pump of the dollar in the next few weeks and months, at least towards this mid-range and potentially even to range highs. We've also had some macro developments that support the growth of the dollar with the FOMC meeting this week, where Jerome Powell basically revised the Fed's projections for inflation for the next few months and years, suggesting that they expect inflation to rise even more than previously anticipated. And they also explained that the US economy is doing stronger than previously anticipated. And this is bullish for the dollar because it suggests that the Federal Reserve is less likely to start easing aggressively, like to cut interest rates, for example. In fact, there are 7 officials now from the Federal Reserve that believe that there won't be any rate cuts in 2025, whereas in March, only 4 officials believe that there will not be a single rate cut in 2025. And obviously, the developments around tariffs and also the geopolitical tensions in the Middle East have contributed to the stance, because now we have inflation risks due to tariffs, but also due to rising oil because of what is happening in Iran. While Bitcoin is printing this monthly bearish divergence and the dollar is at range lows and building this weekly bullish divergence, we also have the S&P 500, which is close to its previous all-time high area and printing a daily bearish divergence as well. Usually divergences in stock markets are less reliant, but there's still something worth monitoring, especially when they happen at a very big resistance area. So if everything plays out, the dollar starts pumping, stock markets start declining slightly, and this divergence plays out on Bitcoin, I think we are up for a nice correction in the next few weeks and months, which is why these ideas should be monitored and why I believed it was necessary to cover these 3 main developments in this weekly update. So I hope you find this helpful. Let me know in the fundamentals if you have questions. Have a nice weekend, fam, and stay safe trading.